Look, API runs one of Australia's leading health and beauty brands in Priceline Pharmacy, and we're one of 3 major pharmaceutical distributors in Australia. The Priceline Pharmacy brand has over 425 stores and sales in excess of 1.7 billion. This all sort of results in the fact that we currently have a market capitalisation of over $900 million. We've got revenues in excess of $3 billion, and we're on the ASX 200. Well, you can probably split that into some component pieces to understand the business. So let me describe Priceline Pharmacy firstly. So that's clearly about growing our footprint. As I said, we've already got 425 stores, and we see the fact that we can grow that into 500 plus stores in the medium term. We can do that because there's 5,400 pharmacies in the country, and we clearly think that there's a space for us moving forward. We've grown at somewhere in the order of 20 to 30 stores per annum over the last 3 years, so that growth rate is not unachievable, in fact, arguably conservative. Similarly, with the Priceline Pharmacy brand, how do we do it? We connect with our customers. So we build on a brand that clearly means that she can shop and have a woman's playground for all of her health and beauty needs. That comes about by making sure that we deliver to her most famous brands possible at the best prices, and combine that with an in-store service with professional and a personal touch that can't be matched. I have to say that we're investing further in that personal touch by training and developing our own beauty advisors and health professionals accordingly. And then I get to pharmacy distribution, which really is a super competitive environment. We're just trying to simply make sure that we maintain our return on investment from that part of the business and generate the cash for the organisation. It is a competitive environment, so we just need to make sure that we focus on delivering that best offer to our customers, and also, where we can, just assist them in their own business planning requirements. So we think the biggest opportunities for growth in our industry are simply, again, developing our Priceline Pharmacy footprint. Currently, with 425 stores, we see an ability to be at 500 stores in the short to medium term as more than achievable. Similarly, we see like-for-like growth amongst our existing network of in excess of 3% being absolutely achievable. So the combination of those organic assets delivering will result in improved shareholder returns. Well, we just released our first half results for the current financial year, where underlying net profit after tax was up 18% on an underlying basis to 25.3 million. Revenues were up 4%. We moved that to an earnings before interest and tax of 15%, which demonstrates the operational productivity that we have in the business. We've done and achieved that through the infrastructure investment we've made over the last few years, which generates that operational productivity. That means that we have a strong focus on costs, so our cost of doing business has reduced in the last 4 reporting periods, and something we're quite proud of, as we've leveraged that investment that shareholders have given us into something that's quite tangible for them. Our return on equity is up 210 basis points to now 9.5%, and dividends, more importantly, are also up 25% to 2.5 cents per share. I think 66% up on the 2 years prior.